Deep Dive with David Stendal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, David Stendal here today with our deep dive. It is October 18, 2017, and tonight's featured market is going to be cattle, live cattle. The ETF that you'd want to look at if you don't trade the futures would be COW, C-O-W. Kind of a mixed bag here, and it's going to take a little bit of time here, but let me explain what's taking place here. We've got a mixed bag when it comes to the trends, with the short being up and the intermediate and longer term being negative. Hence, we've got a little asterisk here for showing that it is, in fact, a mixed bag. We have the technicals, which are positive, but we have the seasonals, which are pointing down. And this is what I want to focus on, specifically when we get into it, the deeper aspects here. So let's first take a look at the market, get a feel for what's taking place. Here is a very long-term daily chart for cattle. And the reason it's such a long-term chart, and I've gone back so far, is because I want to show you some support and resistance levels and really get a feel for what's taking place. So it's hard to see here, but we had a gap down, and then the market reversed course and closed positive on the day. And that caused the systems to do quite a bit of fluctuation, a little bit of extra trading. So where do we stand? If the market is able to hold on to this support, which is at the 200-day moving average, this gray line, which is where it broke below, but obviously closed back above it, and this yellow line, which is the 50-day moving average, you can see that they're both in this vicinity. So there's support to the market based on simple moving averages. But it's the fact that we have key support here, back here on this at one time resistance, but now acting as support to the market. We got 42 there, which is strong. We got this 14, which is kind of out in the middle of nowhere, but it is still nonetheless support. We've got an 8 right here, and then the long-term support that is near term with a 30. If I just kind of cursor over, they're not identical, but they're in the same vicinity. So to give you some numbers here, this one was at 11, I'm just going to round it, 111.5. This one's at 109.5. This little one right here is at 110. And this one over here is at 109.5 as well. So between 109.5 and this 111.5, that's where we would find support to the market. We are still working off of this high, which occurred on the 11th of this month, and we had both an elastic level as well as a wave level high that both occurred on the same bar, same general area. And since that time, the market had been selling off with this unusual gap down and a reverse to the upside here. So a lot of times what we want to do is we want to look at the seasonal tendencies to the market and get an idea as to what may lay ahead here. So if we take a look at the seasonal top 10, which is one of the main reasons I'm looking at this market, you see live cattle here. It's a really good chart to look at if ever you're looking to find a particular system that has some seasonal tendencies to it. The gray line shows that the 4 time frames that we look at, the 5, 10, 15, and 20-year time frames, are all in a positive correlation period. The blue line represents the average correlation. It's kind of a hard number to explain in this deep dive, but suffice to say that the blue line is far to the right, and it shows that there is some consistency here. If we take a look at the seasonal tendencies, this is where it gets a little bit mixed up. Here's the peak from the 11th, I believe it was, and the market's been selling off ever since. We're looking for the market to maybe rally a little bit, but then to have a sell-off into the middle of November. That's all that I'm going to be looking at here. Forget about this other gyrations to the market. I'm just simply looking at it over the next 21 days. And what's basically happened in the next 21 days, when we take into account the 5, the 10s, and the 15s, is that today being the 18th, We update these charts every day, so this is from last evening. It'll be updated tonight, but you can see that we might expect some type of rally here, and then the market will sell off through and into November. This is only going out 21 days, but if I cursor back here and we look at the 5 years, you can see that that would go a little bit further into November with the sell-off. So where we stand now today versus 21 days in the future, which is what the deep dive looks at, it is slightly down. That's why I'm pointing this out, that the technicals are higher, but the seasonals are lower. It doesn't necessarily mean that it's a long term. It's really just simply looking at the next 21 days. So net from where we are now to where we would be in 21 days, forget about the gyration here, you'd see that that's why it's negative. That's why sometimes you have to look at the seasonal charts and the projections to fully understand what the deep dive is actually pointing out. So for our purposes right now, how are the systems trading this? Well, I pointed out that the market was kind of volatile today with that gap down and then the reversal to a positive close here. That our systems are still short. At least one system is still short. I mentioned that pivot high occurred on the 11th. Well, that's when the system actually went short. So it's been short now for a little period of time. But our daily system recently went flat the market. Don't normally go into this kind of a detail, but I do want to show this, that because the markets have, this particular market has been somewhat volatile with the strange nuances over the last couple of days, that sometimes you want to take a look at past trades and see what's taken place. So you can always look for the exits for all of the same systems, again for live cattle, and what you'll find is that in the last couple of days, and this chart only holds on to trades for I believe 2 days, what this means is that you can always go back in time to see what trades did exit. So you can see that we had a long system that did exit on the 17th and had been in a trade for a nice period of time, and a short system had liquidated just today based on that little reversal. So this is basically saying that it was kind of an unusual 4 or 5 days or so ever since this peak. Remember I pointed out this peak right here on the elastic level, that being the 11th. That's when the sole system that is still short the market did in fact go short, and ever since then the market has been trending down with the exception of this little reversal. So with the fact that there's going to be the potential for the seasonal tendencies to pop up a little bit, we'll see us running up. That system liquidates itself and goes flat, and then we have some other systems potentially go long the market. But if they do that, then we would expect it to be a short-term little pop to the market. We've got some resistance up here, and then we do expect the market to sell off, as I've been talking about, into November. And that drop off into November, should it actually take place, and this is well into the future, but we would be looking at that support resistance levels that I've been talking about for it to go through its gyrations, and I'll just simply use this support level right here of 109.5 as the target should the market actually start to sell off. So that'll at least give you an idea as to what's going on with cattle. And I do want to point out that it is important that if you don't trade the futures, that you look at some of these other ETFs. The COW, C-O-W ETF is not a perfect match, but it's a quality match. I'll phrase it that way. And it's one that you may want to actually consider, considering that we're going to be looking at some volatile trending bias to the market through the end of the year with the bounce that we're anticipating to the upside, the reversal back into November, and then as you saw with those seasonal charts that there'll be some other tradable opportunities through November and into December. So that's tonight's deep dive. I appreciate it, and we'll take a look at another market tomorrow.